Good morning, replayers. Please share Heart It Up. Got some news coming out of Europe this morning. Tragedy strikes. Not cool. Not cool at all. Robert, good morning. EI, what's up? Good morning, good morning. So right now, guys, we're watching the Euro USD pair. Last night, I told you we placed a stop. This is the 2-hour chart. Let's bring it out to the daily chart. Daily chart is still showing that we are in a negative atmosphere for the Euro USD. We still have not made up this volatility caused by the Federal Reserve to the downside. We still have not made that up. We have bad news coming out of Brussels with a terrorist attack, or suspected terrorist attack as of this point, I believe. LeBoy, good morning. And so yesterday we had the discussion. Our stop was going to be at 1220. We took 80 pips out of the market between Friday and Monday. What's up, LeBoy? And I told you guys we are likely to have support around this area, which is the case. We have a big retracement in this candle here, okay? Once we got down to the 1188 level, okay? Now I said that we're likely to see support around 1220, and if we hit that 1220 level, that was our stop. That was our signal to get out. And even though we had a 20 pip loss, we're still up 60 pips right now from Friday of last week, so that's good. Now, the thing is that when we see, in this instance, the system is saying that we're still supposed to be in a short position, but we see a large retracement in candle, what that means is that it's very likely to continue the trend downward. And as I said prior, this area, this huge candle here, and this huge candle, these were caused by volatility by the central banks. And so it's very likely to continue the trend downward to meet this area, which is actually a pretty large area. We're talking about 1177 all the way down to about 1070. So this is a 100 pip range where we could have range bound trading. Okay? So what does that tell us as traders? That we have to be very careful where our entry is, because if we're going to have range bound trading with 100 pips of range, this is daily. This is the daily chart, the chart that we've been looking at for the past few days. I wanted to keep it simple with you guys. We have a retracement. 12.29 is the current price. We got out at 12.20 because that was our stop. So now we have a decision to make. How do we play if we're going to be range bound around a support level here? How do we play that? Okay, well, there's several ways to play it. This is where statistical arbitrage comes into play. Okay, because if we know that there's going to be a range, and around here we can see that the range differs again by about 100 pips. Good morning, Amoon. Guys, please share the feed. Menjen, good morning. Please share the feed. So if we know that there's going to be, thank you, LeBoy, a range-bound trading atmosphere, this is where statistical arbitrage comes into play. And you have to really watch a few statistical indicators. Okay, one of them being standard deviation. These prices are likely to fluctuate around a certain standard deviation, okay, where the ranges are. Okay, so if the standard deviation goes 2 to 3 standard deviations in price upward, there's likely to be people coming in and shorting. And if the price goes 2 to 3 standard deviations downward, there's likely to be buyers coming in. So we have to be very careful around this area, because we are likely to get snapped 30 pips in either direction. And what do we do as traders? Well, what I usually do is I'll go down to a different time frame. Okay, we bring it down to maybe a 2-hour or a 4-hour time frame, and we start judging our trades based upon that time frame. And you can see this is a 2-hour chart right here, Okay, so we know we're going to be trading range bound. We know that for a fact. And you know, this huge candle here happened last night. What I say last scope, about 2 a.m. we would know if this area would be a pop up or a pop down. And guess what happened? At literally exactly 2 a.m. boom, Asia opens, they short the market, and we get a dip of about 70 pips. We had a 70 pip dip. LeBoy, post that again. I didn't catch it. So we had a 70 pip dip here once Asia opened. But what was our loss? Our loss was only 20 pips because we had that stop, and so we're still up net 60 pips. So that's how we played that. The daily is trading in a range, so we come to a lower time frame, the 2 hour or the 4 hour, and we start basing our trades based upon that. So the 2 hour, you can see, is long right here. We would not take this particular trade. We would not take this particular trade because technically our daily is still in, our daily signal based upon our trading algorithm is still in a short position. So we would wait to the next short position signal and we would take that. So as of now, there is no signal. Okay? And that's how we'll play this. The second way you could have played it is if your stop gets taken out at 1220 in that range, you could take a risky play and go with the trend. Because your stop got taken out to the downside, you could continue that and place a short position at 1220. However, where's the danger in that? We have not isolated the point of maximum excursion. Okay? If you're not familiar with that term, maximum excursion means that you are taking your trade, you're placing your trade at a standard deviation level. Alright? Our trend is downward, so we're going to wait till we hit near a standard deviation level or a fib retracement to the upside, and that's where we will place our short position to go downward again. Okay? This is very simple math, and these are the systems that professional traders use and banks. So this is what we have looking forward. We have a terrorist situation. We had bad news come out of Europe this morning. Lindsay, how are you? I remember you. Good morning. Thank you for popping in. Please share the feed, guys. I appreciate it. So we had bad news coming out of Brussels this morning. Unfortunately, there was terrorist attack or suspected terrorist attack. And, you know, how did that affect markets? Well, I was up at about 3 a.m. when Asia shorted this position in the candle. The Asian traders actually started the selling before the news came out, at least to what I saw. So the exaggeration could be news related, but it was probably not the cause. Okay, the cause of this short position was likely Asia opening and deciding that they have to adjust positions. In addition, you know, that might have caused an extra downward slide because we had the terrorist attack. But now you can see traders have stepped in. This is going to be range bound. We're going to pop this up to either a standard deviation from this area or a fib retracement. And at that point, we would resume the downward signal from the daily. Okay, good morning. Good morning, guys. Thank you for popping in. Please heart it up. Please follow. Let me know that the feed is coming in okay. If there's no sticking in the feed, those hearts let me know that there's no sticking. Thank you. Thank you. So you can see we're still popping it up. If we went long at that 1220, we would be 14 pips in the red right now, which is why we bring it down to a lower level in terms of which chart we're watching, and we're waiting for this 2 hour chart to signal another move downward, and that's how we're going to play it. All right, guys? So hope you guys have a great day. I'm going to be watching the Euro very intensely, and we're going to see if we're going to take out this range on the daily. Awesome, LeBoy. Thank you for hopping in. All right, so what we're looking for is a continuation of this daily downward. Okay, We have the retracement in the candle. We're looking for the next candle to probably be resuming downward. Hopefully, we take out this range, continue into this area, which would be about the 1100 area. All right? So 1150 to 1100. What do I suppose? It's very hard to say because obviously you can't predict things that the program is predicting in terms of taking in the data and running all of that data across a few historical instances. All right, so the program sees more than I can see. So I don't even play that game where I would be trying to predict things. I just go according to the indicators, and that's why you code the indicator, because if I'm using 2 to 3 indicators, well, that's great. You can give yourself a pat on the back, but my system is using over 20 indicators. So this is a culmination of things that come together and give us better odds of winning, especially when it comes to trends. Okay, this system particularly, I didn't see that, sorry. This system particularly catches very large trends. You can see that some of these candles are like over 200 pips. So right now we have a 60 pip gain, but that's nothing compared to what the system is designed to catch. The system is designed to catch trades that are anywhere. How is the program finding about all the info? I'll get to that in a second. This program is basically made to catch moves from 50 to 250 pips. Hi, King James. Good morning. Well, obviously you're here, so you must care, right? So maybe go find something else to do with your time, because you know, traders, we got to make money with our time. So you can take your time and go lose money. Anyways, you see this retracement happening, and we're at 1236 right now. So basically what you're going to do is come down to the 2 hour, and what we're doing is we're going to run fib retracements. We can come from here to here, or this level here. Look, yeah, you know, you can't let people get you down. I'm here for the people that want to hear this, you know. And so obviously there's going to be naysayers, but you know, that's what kids do nowadays. Kids nowadays don't know what it's like to wake up and kill the market. So we do know what that's like, and that's the way that we play our game. That's our game, and that's what we excel at. So right now we're at 1235. As I said, we're going to either look for a fib retracement. We can run from highs. We can run from this high all the way up here. We can run a fib retracement to this low right here, and that's how we could play. Or we just can do standard deviation based upon this level, all right? Which there are indicators, or there are built-in indicators probably to most platforms that would be able to do standard deviation lines. But so here's the thing: there's a lot of people coming into the room. If it's your first time here, please say hello. Let me know where you're from. Joel, how are you? Interact with me, guys. I want to know who you are and where you're from. Now, LeBoy, back to your question. Where does the data come from? All right, the data comes from the exchange, and every exchange. Caldwell from Cincinnati, how are you? Thank you for hopping in the room. Appreciate it. The data that any system uses has to come from somewhere, right? So every exchange, every brokerage has what is called tick data, all right? But that's not the only data they have. So it's not only in terms of pricing. They also have much more data that you can get directly from the exchange. Create a program. Yes. So these types of programs obviously can be used in multiple applications, not just trading. They have applications to medicine and everything in between. So what you're seeing here is just basically price action for a security, currency pair in particular. But the same system will also work for many other securities. I'm just showing you the Euro USD cross. Why? Because of stuff like this. Euro USD is very prone to volatility. Yes, I've been studying this for over 10 years. Did I go to school for this? No, I did not go to university for this. My degree is in pre-med and exercise science. So those are I have a double bachelor in pre-med and exercise science, but I took a love to trading, and so that is what I do. Sorry, I didn't see comment. But guys, the bottom line is, right now, in terms of education, if you want me to touch upon that, education is freely available on the internet. Wikipedia has the same information that Harvard has. So, you don't have to go to school to learn anything in particular right now, because information is a commoditized subject right now. You can get it on Wikipedia for free. You can go to your local library. You can get information for free. What you cannot get for free is experience. Experience will teach you how to apply what you learn. LaBoy, thank you for hopping in the room. Have a wonderful day. So as I said, we are looking to continue this trend downward, and that's where we're going to be focused at. Okay? So I will hop on with an update when that occurs. Is this used for hedge funds? Yes, hedge funds do use the same exact type of programming I am using with this particular system, and they do it across multiple asset classes and across multiple strategies. Okay, their strategies, of course, are going to be a lot more precise, because they get to negotiate fees when it comes to the brokerage, and they also get to borrow very large sums of money to leverage up their positions. And let me tell you, that is a game all in itself. So besides the indications that we are having here, there's also a very mathematical and accounting-based process that hedge funds use to add further game to the market, to add further strategy to the market, where they can take even more so-called alpha from the market, okay? So alpha is basically your ability to outperform what the market would be doing if you just put your money in the market and just let it sit there. Alpha is the difference between the benchmark that most people would be able to get in investing, all right, which is basically kind of it's basically the risk-free rate. Okay, if you placed your money in a bond or in a risk-free financial investment, alpha would be the difference between what you could earn in a risk-free investment and what you earn by taking risk. Okay, and so when you enter a market, whether it's the currency markets or any other type of market, could be equities, could be bonds, could be anything else. Well, I'm basically just giving away information for people to hop along on my trades. I don't necessarily teach this right now, although I'm starting to get a lot of interest in it, so I might. Thank you for that interest. If there's a demand for it, I just might try it. So you can hear my cats fighting in the background because they're hungry. Anyways, the point is that yes, this is the type of coding that is used by firms and banks. Now what else? We're looking to take this short position anytime now, but in terms of forecasting, I'm not going to do that. Why? Because the system will do that for me. Okay, the system is going to view the data points and calculate what position should be taken much faster than a human can. Even if I had an eidetic memory and I could memorize patterns going back for years, the system is still going to be able to determine my position better than if I were to take it myself. So that is what I'm waiting for. And what do I do in the interim? You sit on your hands and you be patient. This is one of those periods where you just have to be patient. Did Brussels make this rise? No, Brussels did not make this rise. What actually made this rise was we came into a period of support that was caused by previous price action. Okay, when Asia came into the market and the Asian markets opened this morning, which was about 2 a.m. Eastern Standard Time, Asia came right into the market and shorted. Now, I was awake when this happened, and the shorting happened before the news did. Did the news continue this short? Possibly, yes. Whenever something terrorist-related happens, of course, people panic, price movement gets erratic, there's excess volatility, and, what does it tell you when a terrorist attack causes less volatility than the Fed does? That's the real question. What does that tell you as a consumer, as a person in the world, when a bank can release a sheet of paper determining interest rates by only 25 basis points, and that causes this type of move, and terrorist attacks cause this? That is the real question. And let me tell you, that question is scary. That question is scary. When central banks hold that much power, that they're doing 5 to 10 times the impact of a terrorist attack, that lets you know how much power central banks have. And that lets you know how you need to pay attention to that FOMC report. When that report comes out, you better be paying attention. You better be reducing your risk when that report comes out. All right. So, anyways, guys, have a great day. Thank you for hopping online. I will see you on the next scope. We're going to kick ass with this trade going forward, and we are going to pay attention to all of the indicators and how the system is revealing the trades. Yeah, it's a pretty interesting thing to think about, right? Pretty interesting thing to think about. So thanks for hopping online, guys. I will see you in the next scope. Enjoy your day. Carpe diem. Take this day and make use of it. I will talk to you later.